Good afternoon, everyone. Scott G here with the Simple Trading Life. Tuesday edition of our live stream, and for whatever reason, my Thinkorswim is restarting. So give me 1 second to bring it up. I know from some folks in my room, Thinkorswim has been quite the bear here lately. I don't trade on it anymore. I only use it for, well, let's see here. I only use it for charts and analysis, and I'm actually thinking about going a different route. I may talk about that a little bit later today, but we'll see. I'm considering trying something else. I have messed around with TradingView before, and TradingView is not bad, but I'm actually thinking about trying a new product that some of my friends are already using and seem to like quite a bit. So as soon as we get Thinkorswim up, we can kind of get into some analysis. While we're waiting on that, let me bring you guys up on my phone, so we can have some dialogue, right? Interesting. All kinds of glitches today. Let's try it again. There we go. All right, it says there's 3 of you here already. That may or may not be accurate. Let me know if you can hear me and see me just fine and see the screen, because I don't know for sure. There's been lots of glitches today. So if you can see the screen just fine and you can hear me, somebody please just type it in the comments. Just say yes, all good, you know, something like that. That'll let me know. Make that bigger so everyone can see it. So once again, if you guys can hear me, you know, please let me know. You know, give me a thumbs up. Just say, yep, can hear you, can see you, because I just want to make sure. And we will wait just a minute. I was a little bit late today. I apologize. I usually try to get on right around 2 o'clock. Had some errands that I had to run, and had my 14-year-old with me, and we just got back just a couple of minutes ago, so I was running a little bit behind. Okay. All right, well, now that we finally got everything up and running, let's kind of take a look at the action that we've had since yesterday and then so far today. So here was our opening candle last night, right here. Fairly strong, you know, green. Then this one went up just below our supply zone, and this will be coming off, obviously, because we did break through. So we'll be taking that off here in a second. Then we had a resting candle, and then we climbed right up here. Okay, so, excuse me. Right here was our opening candle. Getting a little bit ahead of myself there. Okay, right up here, and we pulled back, then we made another attempt. Okay, then we sold away, then we made another attempt, right? Then we sort of went into this contracting range, and I drew this for the people in my room. Let me get the drawing tool. Okay, I drew this for the people in my room. This move to the downside was really telegraphed. If you just draw right across the top of here, all right, and actually let me activate that. Get this, should be up about, that's weird. There we go. Should be up about like that. All right, so we had this contracting range right here. And then once we broke out, look at this drop. Okay, clear down to here. So give me 1 second here. Somebody's trying to message me. There we go. Okay, so once we dropped out of here, and let's just give an idea, 30, 52, 50, and it came down here as low as 30, 36. So that's what, $16.50. So right there was a really, really nice trade. And once you kind of cleared this area right in here, okay, you had a pretty good idea that you were going to get a bigger move. Now, would I have looked for a move all the way down here on this? No, right? We eventually got there, okay, but you see what happens. We made this move, we came back up, spinning top, came all the way back up to test the moving averages right here, back down, back into the range. Then when we finally touched it, look at that, just barely touched the top of this demand zone. What did we do? Big move away, big bounce away. So we went from 30, 30, 50 as high as 30, 55, 25. Okay, so almost, what is that? Almost $25 move. Almost a $25 move off of the bounce right here out of demand. Then we came back down, right, as we were heading into opening range. Here was a beautiful shooting star right here. And I took some trades this morning. A couple of them were triggered when we got below these moving averages and below this shooting star. As you can see, we had a nice move down. Then we kind of rested for a second. Here was the opening candle, and here's where things started to change. So overall, hey Kelsey, good to see you. Overall, we had been, starting back here, we had been in an overall momentum downtrend. Momentum downtrend, meaning price should be declining. When we say momentum, we're talking about price momentum. Right? We're not talking about volume. We're not talking about anything else. We're talking about price momentum. So it was to the downside here. As you can see, it really fell on this move. Then it tried to climb back up, but I'd already kind of extended this line because that gives you a good indication, right? If it can't get back up through this line, which it didn't, it got right up to it, and then it started trending down again, that gives you a good indication you're going to have more downside, which we did. Then we opened up here and we had a chaotic candle. This was a big green candle at one time. All right, so I took some trades here this morning as well, and these were my best trades of the day. And every trade I took, all right, although this move is strong to the upside, I'm going to show you something here in 1 second. Although this move is strong to the upside, every trade I took today was a short. All right, so you can counter trend trade and do well. Those that are in my room, I see we got several new people joining us. Hello. Those who are in my room, I already posted my trades and I'm done. I was done around 10 a.m. today. I was done around 10 a.m. Okay, over $1,000, 8 out of 10. I took 10 trades this morning. I was 8 out of 10. The only 2 that I didn't win were stop outs. One for 25, minus 25, and one for minus 37.50. 2 biggest losses of the day, my only 2 losses of the day. All right, so even with this strong movement, here's what I did. As this started to climb and we got into this wick, and I'm going to tell you right where my stop outs were. Okay, so right when we got up into this wick, I went ahead and I bought. Okay, short. I went short. Okay, and it moved up a little bit more. I went short again. Then it moved up in here, and I shorted up there as well. So I took one up here as well. Actually, I think I took 2 up there. Then as it came back down, I was targeting right here where the moving averages were together. Now somebody may say, okay, especially if you're new, I kind of explained it to the room. How did I know, or why was I looking to go short when, look down here, the momentum had actually crossed above, see this, had crossed above our overall downtrending momentum and was heading up pretty sharply. The reason that I decided to take these trades, and in my mind, it's a fairly high probability trade. It is, for me, it's a more aggressive trade. Okay, because I'm really conservative, but I felt that it was that high probability that it was a good play. Okay, so it got all the way up here to 30.52.75. I believe my highest short was right around 30.52. So I almost timed it perfectly with my last one. And then I had one somewhere right around 30.51. And then I had a couple when we first got down in here. And those were my stop outs. Those were the ones that stopped me out, but only for 25 and 37.50. Then we got up in here, and this was this big green chaotic candle. And I tell everybody in my room all the time, when you get a big green chaotic candle, especially on open, or if it comes off of a news event or something like that, your biggest risk is exhaustion. And all we mean by exhaustion is there was this intense buying pressure going up. And when it exhausts, that's simply people are like, okay, I'm ready. I'm going to take some profits now. And you see what happened? Okay, this is what's left. It actually came all the way back down here right around the 20. And I sold just above the 200 here. So that was my price target, right? I shorted a strong upside move and I made really good money. And then you know what? I was like, that's it. I don't have to put my money at risk the rest of the day. I don't have to put it at risk. Okay, being content is one of the lost skills, or I shouldn't even say lost. Most traders just don't even know, right? They don't know how to be content. They go 8 for 10, right? And I'm primarily a scalper and day trader, right? So you go 8 for 10, that's 80%. Some people in their mind are like, man, you got to keep pushing. You got to go bigger. Man, you're on fire. You got to keep going. Well, then what happens is typically, I'm not saying this would have happened, but typically you start to make mistakes. You start to overlook things, and you end up giving back some or all of your profit. That's a bad thing. That's a bad thing. Lock it in. It's one of my favorite phrases. Lock it in and just be content. Right? If you have to, just get away. Get away from the screen. Go do something else. I went and walked. For about an hour. I walk every day, somewhere between 2.7 to 3.5 miles. I walked 3.5 miles yesterday. I walked 2.7 today. It's hot and humid today here in Atlanta. So you should just be content. Now, I'm not saying you can't continue to trade. You obviously can. But I would actually take less and less and less risk because the law of averages are going to start to go against you. And what do I mean by that? Okay, again, I've covered this before, but I see we got a bunch of new people joining us. Welcome to everybody. Make sure you give us a thumbs up and subscribe to the channel. Turn on that notifications bell so you'll know whenever we go live. But what I mean by the law of averages are going to go against you. If you're, let's say, a 60% trader, meaning you win about 60% of your trades. Well, if you're 8 out of 10, you're already over that 60%, right? So what's more likely to happen to you if you keep trading? What's most likely to happen? Things are going to start to go against you. Because if you're a 60% trader, and I'm just using that number generically, and you've won 8 out of your last 10 trades, or some people might have won 6 in a row, the law of averages say pretty soon that's going to start going against you. Now, there's many reasons for that, but it's just statistically a probability. I play probabilities. All right? So knowing when to stop when you're ahead. Right? Don't make mistakes. Don't put your profits at risk. I see it every day. I see it from people in our room. I see it from people on Twitter. I see, friends of mine. That's the worst story to tell, right? Man, I was up, I'm just making a number up. I was up $1,500 and man, I got greedy and I gave it all back. That's like the worst story you can tell, right? You should have ended the day up $1,500, or you should have ended the day, at least somewhere near there. If you're going to continue to trade, right, take less and less risk, use smaller and smaller position size so you can't get hurt, all right? Kelsey's asking, how did I learn to be content with small losses because it's a lot better than big losses? Well, it's learned, it's experience, right? You've got to get to a point, and I always say, I call it, reconstructing your mindset, because we're not wired that way. We're wired that we want to win every single time, no matter what we're doing. But you have to understand, in trading, a small loss is a good thing. The only thing that's bad is a big loss, right? And as we're talking here, I see we are getting some momentum. Look at these bottoming tails here, right here. Okay, so that I'll go back to that in a second. But if you look, we had this strong move. Okay, up here near resistance, pulled back, right? Now what we're going to watch, we're going to see, can we make a higher high? Or are we going to get up in this range, up in here, and kind of double top and then start to go lower? Those are the things we're anticipating. Remember, we've been talking about that a lot. Okay, you want to anticipate. Okay, so back to Kelsey's question. That's just it's a learned skill. Anybody can learn it, but you have to practice. Okay, just like Kelsey's in our room, and she's a newer trader, or from an experience standpoint, would be considered a novice trader. And what we're trying to work with her and others with are taking smaller profits quicker and stopping out quickly with small losses. You do that over and over again. So one of the things that I suggested to her and others in the room are, if you have a hard time, like if you're constantly, a trade will be in your favor, and then all of a sudden you give it all back, and now you're red. If that's happening to you more often than not, try this exercise. As soon as you get into profit, and I'm not talking about $1 or $2, but as soon as you get into profit. So I know Kelsey's trying to use like a $20 target. If she gets in profit $20, boom, I'm going to take it no matter what. I don't care if that thing takes off and goes to the moon. Because what's going to happen is, more often than not, you're going to lock in that profit and you're going to be better off than where you were when you're thinking, okay, am I going to make $100? Am I going to make 150? Am I going to? Okay, so you just keep waiting and waiting and waiting, and all of a sudden price goes back against you. So again, this is a good habit or a good practice to get into. So if you're struggling with that, get into the habit. Just say, for the next week or for the next 2 weeks or for the next month, as soon as I get into profit, I'm just taking it. And basically as soon as I go red, I'm getting out. All right. Now, if you trade forex or futures, you can do that as many times as you want in a day because there's no PDT rule. Obviously, if you're trading equities, you got the PDT rule to contend with, unless your account's over 25 grand, which, if you're trading that way, I doubt your account's over 25 grand, right? So look at this over here, starting to really push to the upside. I'm not in anything right now, so I would let you know if I did jump in anything. Okay, but you can see, I pointed out, we had all these bottoming tails here, which that's buying pressure, right? So now we're waiting to see, can we get up here and make a higher high? Or at some point, will this reverse back down? Will we get up in here, double top, and go lower? Okay, was up 30, set a stop at 20. Good job, very good job. And that's great, right? Trail, you can trail your stops. So when you get into profit, and for everybody it's going to be different, right? Because I don't know your account size, small accounts, medium size, and bigger accounts. Everybody's going to trade slightly differently. Everybody has different risk tolerances. But once you get into profitability, get that stop moved up to at least break even or slightly into profitability as soon as possible. right? That's why certain traders almost never take big losses. Some hardly ever take losses, period. Now, nobody's 100%. Anybody who tells you they are, they're lying, right? I've said it on here before. The best single month, I'm talking about an entire month, I ever had, I was like 90%, and that happened one time in my entire career, and I've been trading for over 28 years. One time, okay, because it's an aberration, right? Even the best traders are typically, if they're honest, are typically 60 to 65%. When they're having a really good month, they might be 70, 75%. But those guys who tell you that they're consistently, 90%, even like 80 to 90% in a day, I can totally believe it. Maybe even a week. All right, but those guys who tell you that they trade like that, week after week, month after month, year after year, it is a lie. I've never met anybody that I know personally, and I know some really good traders. I know some traders that trade huge amounts of money and are wildly successful. That's all they do for a living. They're nowhere near that. In fact, some of these guys are like hover right around 50%. But their risk to reward is so good, or I say reward to risk, is so good that it doesn't matter that they float between the high 40s and low 50s, and that's kind of where they live in terms of win rate, okay? But just don't believe those guys who are always telling you they're winning like 80, 90, 100%. Let's see here. Kelsey's typing some stuff. Knew a guy who told me he was always green. No, right? It's not even possible, right? Let's just say it didn't end well for the people who listened to him. That's right. Those kind of people, I mean, again, you'll never hear me badmouth individuals, okay? But there are a lot of people out there that give horrible advice, and they just out and out lie about what's going on or how successful they are or whatever. Most traders, again, even if they're really, really good, over a wide range of trades are only going to be 60, 65%. And that's really good, right? Because if your reward to risk is good, you're making good money. And then the guys who are like hyper good, they might be 70 to 75%. And some guys only ever get, they might get into that range once in a while and they kind of fade back. But that's fine. And there's really, really good traders who are under 50%, but they're going for a different type of trade. They're going for more reward to risk, so they're going to lose more often, but they're going to lose small. And then when they win really big. But I don't advise that kind of trading strategy for newer, struggling, or improving traders because, again, it's a mental game. And that is so difficult to handle mentally, losing 60 to 70% of the time. It takes a special type of person who's totally rewired their brain to be able to lose, big win. Lose, big win. Lose. You're just constantly losing, even though it's small, and then all of a sudden you'll get a big win. It takes a really special person to be able to do that. Okay? All right, so let's get back to this now. So I just told you where I took my trades. I took shorts here, and then I took shorts when we got up here when it pulled, because it pulled all the way back down to here. That was my target, and then it bounced, and look at that strong move. Now, I was looking that we may have saw some resistance right here, okay, because this was the first test of this supply zone. Now, what is this supply zone? It's just simply a drop, base drop right there. Okay, those are not the strongest. Okay, those in my room know that. Okay, they will typically, if there's not a whole lot of momentum, they will typically hold the first time, meaning they'll hit and they'll reverse. All right, but these are not as strong as, now this is not a strong one, but I'm just trying to show you something. A rally base drop. So if we had like a big green candle and then a couple of resting candles and then a big red candle leaving, rally, base, drop, those are your strongest for supply. Maybe exactly the opposite, drop, base, rally for demand. So it was no surprise that we blew right through this zone. Now, I wasn't home when this happened, so I don't know if it did come up here and kind of waffle. I wasn't watching it at the time. Maybe somebody was watching it. I don't know. So I don't know if it got up here and backed off a couple of times and then broke through, or did it go straight through? I don't know. But it's no surprise to me that it broke through because of this right here. Look at how momentum had changed. Man, this is like crazy momentum. Right? That's like, if that's 90%, that's probably like 90 degree angle, which would be straight up. That's probably like a 75-degree angle on momentum. Momentum had shifted. See this? We went down, 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 and then boom, big momentum shift to the upside. Then we sort of ranged. Then we dropped right here, right, on this big candle. Let's look at something here real quick. Nope. Didn't have anything that really led us to know from a momentum standpoint. Every once in a while, this will give you an indicator ahead of time, like a candle or so ahead of time, that a change is coming. So you have to pay attention to that. But I mean, right here, basically, it rested, it dropped, okay, and now we had been moving to the side. Okay, see this? Momentum was a little bit trending up. Then we got this bigger move to the upside. Now we're going to see, is this a resting candle? Is this going to be a resting candle and then a bigger move up? Or are we going to start to run out of momentum? We don't know yet, right? We don't know. And right now, there's nothing else giving us like huge clues one way or the other. Okay. All right. So, one other thing I wanted to talk about. We can remove this now. Once it's been broken, you should remove a zone. Okay, so that zone is gone. We still have the 307575 resistance area above. This, I'm still leaving this demand zone in because look how strong it was. Just barely got touched. Okay, one tick into the zone and then bam, just blew right out of there. Okay, so we would expect the next time it gets down here, even if it penetrates into it, it's probably going to hold again the next time it gets down there. Just because we can see how strong it was. See how strong it left initially, right? Here's what created the zone. There was your resting candles right here. So we went drop, base. Now this wasn't the best drop, but look at the rally. Look at the rally away. The rally actually came clear to here, but look at this candle. When you see these big, strong candles leaving a zone, that tells you how much buying pressure, how many buyers, aggressive buyers, were in this zone. In this wick too, right? That's what that wick says. You put these two together, and that's telling you that this should have been a strong demand zone, and it was. We got right to it, got one tick into the zone, and it just blasted clear up here. All right? So that's something to keep in mind. We talked about momentum down here. Again, if you're brand new, we do not use RSI for overbought and oversold. We use it to gauge momentum, price momentum. Okay, nothing else. We do not care about overbought and oversold. You can be overbought or you can be oversold way longer than you think you can be. So, and again, I've told you guys this before. I tell it to you all the time. There's a guy out there that studies indicators. That's kind of his thing. That's what he does. And he's literally studied like hundreds of indicators, and he back tests them, and he follows the rules as if or as they're supposed to be used. So he'll take the standard settings for something like RSI with 70 and 30. Obviously, we use 60-40 because we're gauging momentum and not overbought and oversold. But he'll use 70-30, and he'll use all the rules by how you should trade that indicator, and RSI is actually one of the worst when it's tested, when it's used as overbought and oversold. It's one of the worst. And I think, and again, don't hold me to this because I'm not an indicator guy. I don't use indicators like in the traditional fashion. I believe he said from a back testing perspective, the best indicator he's ever tested from a win rate using the rules as they are stated, not modifying them, not trying to manage it in different ways, I believe was MACD, and it had a win rate when he back tested it of over 60%. So that's pretty good. Okay, but again, I'm not an indicator guy. There's Bollinger Bands, there's Keltner channels, there's pitchforks, there's there's all different kinds. I mean, there's literally hundreds and hundreds of indicators. But there are people out there that that's all they do is test that kind of stuff. Now, when you start manipulating things, like some people will change the settings, some people will combine them with other things, yeah, you might be able to get something like RSI to work in a pretty good manner. I'm just saying the traditional way, the way it's taught and the way it's supposed to be used, it's not good. All right? So that's all I'm going to say about that. Hang on one second here. Kelsey says, I took a trade on the break of the hourly shooting star about an hour ago and immediately stopped out. Do you have any feedback? Okay, so let me go to an hourly chart. That's what we're here for. Let's take a look. All right, so give me 1 second. Without even looking, it probably is going to be... now, Kelsey, I think you're probably talking about this thing right here. Again, I would like to see you and everybody be much more selective in what you think or call a shooting star or a hammer. This is a much better. I don't like to see wicks. Okay, small ones are okay. All right, and as you can see, this one came down a little bit. You could have made money on this one. This is not really a good shooting star right here. Okay, I like to see the textbook definition is that you should have a small body and then the wick should be about 2 times the length. I really think that you should have a smaller body and the wick should be at least 3 times the length of the body. The longer the wick, the better, as long as it's not some crazy wick because one time it was a chaotic candle that exhausted. Okay, that's kind of different, but I like a longer wick. I like bodies about like this, maybe slightly bigger. That one's okay. This is a little bit too big of a body and not a long enough wick. Now, if this wick would have maybe came up to here, plus you've already hit it, look at momentum. Momentum was strong to the upside. Okay, so you just got to be careful. It's not that you can't take shorts. You did the right thing. You had to stop, and you got stopped out quickly. Right? You got stopped out quickly. Now, here, this is the hourly. Here is a hammer. Again, little wick. Okay, I would prefer there not be a wick, but little wick, okay. Small body, and this is probably right about 3 times the size of that, and look what we're getting. We're getting a nice solid move. Right? To me, this is a much higher probability play. You have the 200 up here. Okay, this is the hourly. And then you also have resistance at 30, 75, 75. Okay, so we covered that there for Kelsey. Let me look and see if anything catches my eye over here on my watch list. Nothing looks like it's crazy. Netflix up almost 10 bucks. Let's take a look at Netflix. Let me go back to the 30-minute. Actually, I'm going to go to the daily. I think Netflix was on our watch list today, as a matter of fact. So let's just take a look over here at Netflix. Yeah, okay, so Netflix was a hammer. This is a hammer. Okay, this is great. I didn't even realize this until we just brought it up. This is what you're looking for. That's like almost a perfect hammer to me. And look where it rejected. It rejected off the 20 on the daily. Okay, it pierced through, but it couldn't hold, push back up, and then look what we have today. So our trigger was at 450.02, and it's been as high as 457.59. So it's up over $7.50 on the day, still near high of day right now. Okay, right now, near high of day. This is what you're looking for. So everybody watching, you should take a snapshot of something like this. And when you see a nice strong move, okay, so here was our high, and over a few days, strong move to the downside, and then you get a hammer, okay, then you should be looking for some sign of reversal to the upside, which would be taking this out or gapping above it like we did today. We gapped above it, tried to move back down a little bit, and once it comes back through and takes out opening price, that's your trigger, you're in, and potentially you still could be in, right? Potentially, because it's still near high a day. It's within 50 cents or so. All right, so that's what you're looking for right there. That's a hammer, or if you flipped it around, okay, here's a decent shooting star. Okay, now this wasn't at the end of a move. Remember, context matters. Context matters. We like to see them towards the lower part of a strong move. Okay, we were going up. We had a little bit of a shooting star. Then we tried to reverse, but we could not get any momentum to the downside. Now, that's still a good move, right? 423 down to, okay, that's almost $11. Okay, so that is a good move. Now, if you're playing the daily, though, you'd probably want to see some continuation over the next couple of days. All right, but these are the kind of things you're looking for in the right places. After a strong move to the upside, after a strong move to the downside. So I hope that helps everybody. That's right. Wasn't really what I would classify a real shooting star. All right, let's look. NVIDIA. It says it's up $10 today, and I'm pretty sure it was on our watch list as well. And yep, here we go again. Look at this. Another beautiful hammer. Let me make it a little bit easier to see. Beautiful hammer off the 20. We gapped up. Your trigger was at 372.56. It's been as high as 381.05. So about $8.50 approximately. $8.50 to the good. Okay. Okay, location matters. Again, where did it reject? It would not hold below the 20 on the daily. We get this nice hammer, and there we go. Okay, again, for us, we're primarily, right, primarily scalping and day trading. We do have some people who swing trade. We do occasionally take a swing trade. Excuse me, I'm a little bit dry. But for a day trade, this is perfect. This is an awesome setup. Awesome setup, okay? So I know both of those were on our watch list. Let's see if anything else catches our eye. Okay, PayPal, $5 move. Let's look at PayPal. Okay, PayPal, just a decent move. Okay, that's not a hammer. It's just a decent move is all. Okay. Seeing if there's anything else catches our eye. Let's look here. Oh, Tesla. Good old Tesla. Look at that. Look at that strength. Okay, now what we have here is a pattern that is known as a J hook. Why? Because it looks just like a J. You see this? Frequently happens when price comes back to the 20. Okay, you're above the 20. The 20 is above the 200. Okay, see how it's been bouncing along here? You come back, you hold the 20, and then you slingshot off of it higher, and they call it a J hook because it looks just like a J. You can have it exactly the opposite to the downside. If the 20 is below the 200, price comes back up. So it would look like an upside down J, right? Or like a candy cane almost. Price comes back up to the 20, holds the 20, and then goes lower. So it would be exactly the opposite of it. If it was coming from the bottom, let's just imagine this 20 is going down. Okay, if it was coming from the bottom, it would come up and hook around and then go lower. When it's on top, they call it a J hook, and it goes higher. It slingshots right up off of the 20. So Tesla up, where was it again? Up $74 today. As you can see, that's one of the bigger candles here recently. So anybody who was playing Tesla today probably made some good money, right? Probably made some really good money. And let's see if there was anything else. Let's look at Alta. Nothing really crazy. There is a possibility if it kind of ends up like this, maybe tomorrow we see some continuation back towards the 20. All right, so here's where you start to anticipate, right? Come all the way back up here. When you look at charts, start to look at charts like this. Start to pick this stuff out. Okay, here we rejected 256.78, which was a resistance area. We dropped all the way down here, and then what did we do? We came back and tested the 20. Then we dropped, and then what did we do? And look at all these places. Again, if people don't think support and resistance works, they're just putting blinders over their eyes. Okay, I haven't adjusted these levels on Alta in a while, and look at them still being respected. Okay, now normally if it's something I trade, I'll adjust it maybe every 2 to 3 days or maybe once a week. But they only really need to be adjusted when they're not respected anymore. All right, these levels have been on there for a while, but watch this again. So we break down below the 20, we come back and test it, we drop. Okay, we bounce here off of this support. What did we do? We came back up near the 20 again. Then we drop all the way down here. Okay, now we're testing down here, this 187.55, and we're starting to go this way. I would think we're going to come back. The 20 is going to keep coming down. Maybe we get a little bit of continuation up near it or to it, and then you could see another bounce lower, right? We got one. I'd even go like 1, 2, 3, 4. So we're really only about 4 legs into this move. And you guys who are in my room or you guys who've watched me long enough, a typical move, trend down or up, is around 5 to 7 legs. 1, 2, 3, 4, 5, 6, 7. Okay, once you start going over 7, 8, 9, 10, 11, you're getting overextended. And you probably should be looking for some kind of signal that says, hey, probably going to go the other way. Now, in those legs, they can cover different amounts of area, right? So sometimes, like this one, this is a big leg. It's covering all kinds of area. Then it finally caught support, and it's bouncing. And I would not be shocked to see a little bit more continuation so that the 20 can catch up. Then you would look and see, okay, are we going to bounce lower and make another lower low? So you go lower low, lower high, lower low. It'll be a lower high unless it takes this out up in here. Okay, lower low, and then lower high, and then you're looking for another lower low. Where are we at overall? Okay, so let's go from right here because this was the high. This comes straight down. Okay. See if I can get this to work. Okay, even if I drew it like that, okay, we're trending down, even though we're going up right now. Overall, we're trending down. It could even go slightly above there as long as it doesn't go too far above there. As long as it comes back down below it, the momentum is trending down. Okay, again, that's just a piece of the puzzle. But I would look right here. I would look in the next day or two for these to kind of catch up with each other. All right. Okay, let's see here. Okay, I think that was all we really wanted to look at. Let's go back. Let's go back to ES. As my thinkorswim must be thinking. Let me go back to the 30-minute, which is my primary time frame. A second there. We'll see where we're at. Okay, still moving up. Okay, now we're getting into this area here. This is the crucial area. Let me draw it for you, just so you guys have a visual. I know exactly what I'm looking at, but just so you guys know what I'm looking at. Okay, right there. So if anywhere around here, it could slightly poke out, it could turn around right here, anywhere in here, and it starts going back down, we have the potential that we're putting in a double top. Okay, now I'm not a technical guy that gets into double tops, double bottoms, all that, but you can't ignore them either, right? It's a part of price action. All it's saying, all a double top or a double bottom or a triple top or a triple bottom, all that is saying to you is that there is an area of resistance or there's an area of support. But we know, right? We know, I'm giving you the hypothetical, if for some reason it gets up in here, turns around, if it takes this out right here, has to get all the way below, it is very high odds that you'll go back to the origin of the move. You'll go back to the origin of the move if you take this out after a double top. If you come down and you don't take this out, you may come up and triple top and then come down. Or the next time you come up through here, you might be able to break through. Now, it may break through this time. Okay, again, I'm saying hypothetically, but I'm giving you this area right here because we can see 1, 2, 3 times before, just in the last couple hours, this has been a resistance area. Okay? Okay, so you're asking if I would have continued to trade, what were there some potential trades I would have looked at taking? Okay, so let's look. Let me come back over here because I got to see. Let me close it up. You got to know context. Come back over here. All right. So this is where we broke through. This is where our zone would have been, our supply zone. Then here's our next area of resistance. I would have been looking at the top of that body. And we come back over here. I had already drew this in for you guys earlier today, right across here, but we finally got through it. Okay, because we had rejected all the way around here, okay, until we got through. That may have been, let me show you. This may have been one. Draw it across. Okay, breaking through here. Why? Because 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 times here. You could almost say 13 there and 14 here. We'd rejected this area right through here. All right, so I would probably, if I was trading, the break here, and then let me see what my target would have been. My target would have been the top of this body just below. Okay, so about 30.74 would be the target. Let's come back over here and would not have got there, but I probably would have been trailing like I was doing earlier today and like I almost always do. Okay, so 30.74 would have been up in here, wouldn't have quite made it. As high as this got was 30.7250. I'm trying to be as realistic as possible. And then as it would have started coming back down, I probably would have got stopped out, you know, a couple bucks below this. So the top of this is, let's say, 30.59.50, and I probably would have stopped out at about, let's even be really conservative and say 69. That would have been a $10 move, right? That would have been a nice trade. Okay, I wouldn't have had anything in here. I already took my my exhaustion back. So that would have been one. Okay, we came down. We hammered here. Potential for a scalp here, right? Your first target would be right here, the top of the wick. Your second target would then be up just underneath here, the 30.75. So there's a potential, and that probably would have been good for a few bucks. Let's just say 69, and what's the top of this wick? 72.50. All right, so you might be able to get, now it broke it, okay, so you may have had a target and just exited for around 350, but it did break it, and it went up to 74.50. Okay, but that could have been one. This one here, I'm just telling you, I wouldn't have got that. Okay, I wouldn't have got this one. If I look down here, there was no leading telling me that momentum was already starting to shift to the downside, so I wouldn't have caught that one. Just being realistic, it's a nice candle. I just wouldn't have caught it. This one, maybe, but I would have got stopped out, right? You got a hammer, but it's got this little wick here. So you go above, I would have immediately been stopped out. And then you could have tried it again right here. And then target would have been the top of this red candle. Okay, give me 1 second and I'll give you that one. So you would have been looking at about 66 up to about 71, so about $5 from here to here. Because I would have been exiting here, even though it went up in there, I would have been exiting there just trying to protect against a bounce against. Okay? Okay, so hopefully, Kelsey, that helped you and anybody else who's watching. I see we got several new people who kind of jumped in. We're into power hour now, and you can see it's starting to fade. Okay, as you can see here, this area, just like this one had been earlier, this one's starting to be a tough area. Can't seem to get through here. So you mark them, right? Do something. I mean, I can see it with my eye, but if it helps you, just throw a rectangle right up there and you'll know, right? If you can finally break through, but then you'll know you have this obstacle right above, 30.75.75, area of resistance. If you can take out the bottom of here, then you're looking the bottom of here. Right? And why do we say that? Why do we say the bottom of here? Because of this wick. All of these topping tails are buying pressure. All of them. Okay, again, I'm not telling you to do this. I'm just trying to show you so you can see with your eye. Well, why didn't that start? Give me 1 second here. There we go. Okay, I just want to show you, and I'm going to take it right back off because this is not something I would normally draw in. So from the bottom of here down to the bottom of there, that's all buying pressure. Okay, so I would have this as a target if we can take this, the bottom of this out. Okay, that's me, and I'm conservative. There is no reason to think, from a high probability standpoint, that you're just going to blast down through here without some kind of a news event or something. Okay, because look at these big wicks. Every time they've tried, they've not only been rejected, they've been severely rejected. Bulls come in and say, nope, you're not going lower than this. Okay, you're not going lower than this. Now the funny thing is you could almost extend this level of structure over. Look at that. Okay, remember, we already counted. This had been tested 14 times before it finally broke through. If you extended that across, look, that's right where they've been testing and bouncing. Okay, so was resistance, now support. This level right across, if you just extended that right across there, okay, 14 times from underneath it took before it finally broke through. Now it's come back down 1, 2, 3 times if that was extended across. I'll just do it, make it easy instead of talking about it. Okay, if we just extend this across. All right, you see that level of structure, if it went all the way across there, 1, 2, 3 times, every single time it held, push back up. So if for some reason we get some strength coming back down in here, I would be looking for support in here. All right, and my target would be right there, just above the bottom of this body. You're absolutely welcome, Kelsey, absolutely welcome. Okay, I'm going to take this off again. I only drew that in there for you guys. Okay, and you could extend this across if you want, but the reason I drew that there is because of these wicks. Because you can catch that support anywhere in here, just like over here. Let me show you. All right, let me draw this, because this is where I took my shorts earlier. I want to show you. Okay, it can happen anywhere in here. So that's why the first couple that I got stopped out on, I started taking them here. As soon as we started getting into the wick, I tried it a couple of times and I got stopped out. Then I waited, and when it got up here, it started to waffle. Anybody who was watching it real time knows what I'm talking about. It started to waffle between about 3050 and 3052. About $2 there, it just kept waffling, waffling, waffling. So I ended up taking a couple. I took one right around 3051 and one right around 3052, and it got up to 305275. So I almost got the top. Then I had a realistic profit target that when it exhausts, which I anticipated, okay, for 2 reasons, right? Because it was a chaotic candle and because it was in this big wick right here. Right, that's strong selling pressure. To me, a realistic target was right back here where the moving averages had converged, and sure enough, it went right back down to the 200. And I had my orders there. I had both of those sell orders that I took up here that I went short. I had both of, when I say sell, you're technically buying, all right, but I had both of those orders to exit the trade just above this 200. And boom, it went right down and took them out. I was like, yes, you know, that's how you do it, right? You make your best educated guess based on as many factors as you can put together that make sense from a common sense perspective. How many times have I said, I haven't said it in a long time, but how many times have I told you guys, especially in my room, simpletradinglife.com, absolutely free, everybody. You guys should come join us. How many times have I told you, when you trade, what makes common sense, right? Like block out all the noise. Block out and look at the action on the screen. Go back, go to a higher time frame. Look up here. Again, these little boxes up here, right now it says we're in conflict. 30 minutes is red, the 60-minute is red, but the 4 hours green and the daily is green. They're in conflict. Okay, but if you're looking for a short and all of these are red and you get a trigger, okay, and then you may have some other factors, whatever, you start lining them things up, well then the probability of that trade going in your favor is much higher. Much higher. All right? So anyway, that's why I was looking in here. Okay, because I know that that's aggressive sellers that came in, because this was a big old green candle. That was a big green candle when it was right here. And they came down, and not only did it go from green, they pushed it all the way to red. That's how strong they were. So when this chaotic candle got up in here, I was just waiting. I'm like, man, chaotic candles, especially on the opening candle of the day, typically exhaust. We are in this area right here where we know there was strong selling pressure, aggressive sellers. We have been in an overall downtrend. Now we were starting to go above. Okay, look at this candle. We were just starting to go above then, right? But I was looking at the overall trend that went back into last night was going down. And so to me, that was a high probability play. I'm going to try to play the exhaustion back down to the moving averages, and I'm getting out. I'm not trying to play them all the way back down here. And they never went all the way back down there. They literally went at that time right to the 200, but I had my exit order just above there. So my orders got taken out before it ever hit the 200, and then it bounced. Bounced to here, and then it started to climb, climbed all the way up into here, rejected, and on its next attempt, it made it through. Okay? But we know this was attempt number 14 that rejected, and then finally it made it through. Right? Remember, because we went all the way back through all those times. Okay? All right. Let's see. It's 10 after 3. Anybody have any other questions before I jump off of here? We've been on here about an hour now. I got on about 10 minutes late today. I apologize. I was running errands. So I'll wait just a second, see if anybody has any additional questions. Anybody who's new, if you like what you see, we try to keep everything as simple as possible. Simple and basic pays. I like to say that all the time. Keep things simple, right? So simpletradinglife.com, we have a free chat room. There's a button at our website. You can join our free chat room. It is absolutely free. Okay? You don't have to pay anything. I like to say there's no strings attached. We're just trying to build the biggest free community that we can to help new, struggling, and improving traders get better and become more consistently profitable. And we're hoping that at some point in the future, this thing is just going to be so huge, help a lot of people. And people have been asking me lately, well, how are you going to pay the bills? We know there's expenses involved with this, and there are. And right now, we just take care of that out of pocket. But we're hoping we get so big that other companies may want to sponsor us, and that'll cover the expenses. Keep everything free for you guys. So let's see here. Okay, Rohan, how do you set up top left color coding? Okay, so this is not mine. Somebody gave me permission to use it. That's why I can't give it out. If I could, it's somebody else's. Somebody else created this and allowed me to use it, but it's not mine to give away. So I'm sorry about that. If I could, I would give it away, but somebody allowed me to use it. There are different, I would maybe just do a search, whatever, this is Thinkorswim. So maybe just do a search on Thinkorswim, or maybe go to YouTube and search for, I'm trying to think, a time frame continuity, or time frame confluence, or time frame agreement indicators, something like that. You might be able to find something. When in doubt, just Google it or YouTube it. That's what I always do. But these were allowed. Somebody allowed me to use these, and so that's why I don't just give it out to everybody, because it's not mine to give away. But that's all it is just telling you the time frames. I mean, you can flip back and forth. It just saves me from having to flip back and forth. And in a perfect world, I personally would like to see the monthly, the weekly, the daily, the 4-hour, and the 1 hour. That's what I'd like to see. Okay, this one doesn't go up over the daily. It only goes up to the daily. But it still helps, right? It still helps. So, yeah. Okay. Steve, you're welcome. You're welcome, Steve. And let me see. Okay, I think that's it. I hope everybody has a great day. Pretty soon, all my live streams are going to be absolutely free, starting after July 1st. So anytime I go live, like right now, I do private live streams for our premium group, but that premium group is being absorbed back into the free group. So there's not going to be a premium group anymore. Because again, our original intention was that everything is free. Okay, the gentleman that helps me, his name is Grayson. He handles like our tech and our web stuff and a lot of the the videos that you've seen or articles and stuff. He takes it and creates them and puts them out there for us. He runs our Instagram channel, all that good stuff. Our original intention was that everything was going to be free anyway. And we wanted to build the largest free community possible, both on YouTube and on Discord and on Instagram and Facebook and everywhere, Twitter. So we're working towards that. We're working. We just we went from nothing. We had zero several months ago, and we're up around 330 or so members now. That's in our Discord room, and I don't even know what we're at on YouTube because we actually started YouTube later than that. I think we're around 150, 160 right now, but we really want to grow this thing. So share us, right? Share us with everybody. Subscribe, give us those thumbs up. That really helps us. Maybe let others know on social media that, hey, there's a free place you can come and get analysis and learn how to trade and ask questions. And we're all just regular people here, right? Nobody has an ego. It's, nobody's trying to I know some of those rooms, it's all, the guy who runs the room will be, hey, it's all about me, blah, 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 and how great they are. It's not like that here, right? I'm just like you guys. We're just everyday people and just trying to help you guys become more consistently profitable. All right, everybody. Have an awesome day. Thank you so much for joining us, and we will see you, everybody in here, on Friday, and then starting next week, anytime I go live, you guys will be welcome to join. Have a great day. Bye-bye.